Hello, and welcome back to the channel. I am AlgoBot, your guide to the world of automated trading strategies for MetaTrader 5. Today we are studying an expert advisor called the Value Migration Trend Writer. This is a time-at-price, market profile approach that builds its own developing point of control and then trades pullbacks into that value area while it is drifting in one direction. Over the next few minutes, you will learn how the strategy finds where the market spends the most time, how it measures the migration of that value, and how it structures its entries, stops, and targets. Remember, this is educational information only, not financial advice. Let us start with the big picture. Most pullback systems lean on a moving average as their reference line. The Value Migration Trend Writer does something different. It builds a small time-at-price profile from the recent bars, much like a market profile histogram. For each of the last 100 closed bars, by default, it takes that bar's typical price, the average of the high, the low, and the close, and drops it into one of 40 equal-width price buckets. The bucket that collected the most bars is the modal price bucket, and its center becomes the point of control. In plain language, the point of control is the single price level where the market has spent the most time over the window. Many traders think of it as a kind of value magnet. Because the buckets are sized from the data itself, the strategy adapts to any symbol and any time frame without needing a fixed point size. That is a neat, self-scaling design. The real idea here is value migration. The strategy stores the point of control on every bar and then measures how far it has drifted over the last 20 bars by default. When the point of control is steadily marching higher, value is being accepted at ever higher prices, which the strategy reads as a healthy uptrend. When it is marching lower, that describes a downtrend. When the market simply chops sideways, the point of control stays roughly stationary and the strategy stands aside and produces no trade. What kind of trader might find this interesting as a study? Someone who already thinks in terms of market profile, value areas, and time-at-price, and who prefers buying dips into a trend rather than chasing breakouts. It is designed to run on a single time frame, and the notes suggest the 1-hour chart on a trending foreign exchange major or a metal such as gold as a natural home. As always, trading carries real risk, and losses are a normal part of any approach. Now let us walk through the exact logic, step by step. The expert advisor works on closed bars only, acting once each time a new bar forms. On every new bar, it rebuilds two profiles. The first is the point of control for the window ending at the just closed bar, which we can call the present value level. The second is the point of control for a window ending 20 bars earlier, which we can call the past value level. The difference between them is the drift, and that drift is the heart of the strategy. To decide whether value is genuinely migrating, the strategy compares the drift against a gate. That gate is the minimum drift parameter, which defaults to 0.6, multiplied by the current average true range. Scaling the gate by volatility means the same rule behaves sensibly on a quiet pair and on a fast-moving one. For a long setup, three conditions must all be true. First, the drift must be positive and at least as large as the gate, confirming that value has migrated upward. Second, the just closed bar must have dipped back down close to the point of control, meaning its low came within the pullback tolerance, which defaults to 0.3 times the average true range of that value level. And third, the bar must have closed back above the point of control. Together, these describe a pullback into rising value that was then reclaimed. The strategy is buying the dip to the value magnet while value is still being pushed higher. The short setup is a perfect mirror. The drift must be negative and beyond the gate, confirming that value has migrated downward. The bar must have rallied up to the point of control, with its high reaching within the tolerance. And the bar must have closed back below that value level. This describes selling a rally into a sinking value area. Risk is handled symmetrically and scales with volatility. When a trade opens, the stop loss is placed at the stop multiplier, which defaults to 2 times the average true range away from entry, and the take profit at the target multiplier, which defaults to 3 times the average true range. That gives a reward to risk structure of 1.5 to 1. Only one position is held per magic number, and once it is open, the stop and target quietly manage the exit. Let us read the code as if we were sitting in MetaEditor. At the top are the inputs you can adjust in the strategy tester. ProfileWindow sets how many bars build the time-at-price profile, and ProfileBins sets how finely that profile is split, which controls the resolution of the point of control. Drift lookback is how many bars back we measure migration. Minimum drift and pullback tolerance are both expressed as multiples of the average true range, and the ATR period, stop multiplier, target multiplier, lots, and magic number round out the settings. Next, the strategy computes the present point of control and the past point of control and subtracts them to get the drift. It also prepares two volatility-scaled thresholds, the drift gate and the pullback tolerance. Now look at the two signal lines. The long signal is true when the drift is at least the drift gate, when the just closed bar's low came within tolerance of the present value level, and when its close finished above that level. The short signal is the exact mirror. The drift is below the negative gate. The bar's high reached the value level, and the close finished below it. When the long signal is true, the code reads the ask price, sets the stop loss the stop multiplier times ATR below entry, and the take profit the target multiplier times ATR above, and calls trade.buy. When the short signal is true instead, it reads the bid, places the stop above and the target below by the same multiples, and calls trade.sell. Clean, symmetric, and volatility aware. Let us walk through this chart candle by candle, and notice the blue line running through the price action. That blue line is the developing point of control, the value line, the level where the market has been spending the most time. Watch how it moves, because its migration is what the strategy is really trading. Look at the first several candles on the left. Price is stepping steadily higher, one green bar after another, and crucially the blue value line is climbing right along with it. This is exactly the condition the strategy is waiting for on the long side. Value is not just holding, it is being accepted at ever higher prices. Internally, the strategy is comparing the present value level with where it sat 20 bars earlier, and the upward drift comfortably clears its volatility-scaled gate. The uptrend is confirmed as a migration of value, not just a burst of price. Now watch the fifth candle closely. After that run of strength, price pulls back and dips down until it kisses the blue value line, coming right into the point of control. But it does not stay there. The bar closes back above the value line, leaving a small tail beneath it. That is the precise pattern the strategy is built to buy. The dip came within tolerance of the value level, and the close reclaimed it, so the buy entry marker appears. The idea is simple and intuitive. We are buying the dip into rising value while value is still being pushed higher, rather than chasing the top. From there, follow the next few candles. Price lifts off the value line and pushes upward again, bar after bar, and the value line keeps climbing beneath it. Around the eighth candle, the move reaches the take profit target, set 3 times the average true range above the entry. The long trade is complete, and notice the reward was structured at 1.5 times the distance to the protective stop, which sat 2 times the average true range below the entry, just under that pullback low. Now the character of the chart changes. Watch the blue value line near the top. It flattens, rolls over, and begins to turn down. Price has topped and is starting to slip below the value line, which tells the strategy that value is now migrating lower. The downward drift builds until it clears the gate on the short side, and the strategy flips its attention to selling rallies. Look at the 11th candle. Price bounces and rallies back up toward the falling value line, reaching up to touch the point of control from below. But just like the mirror image of our long setup, the bar closes back below the value line. It could not accept the higher price. That is the short signal and the sell entry marker prints. We are selling the rally into a sinking value area. From there, price rolls over and works lower, candle after candle, with the blue value line sloping down above it. By the final candle, the move reaches the take profit target, placed 3 times the average true range below the short entry, while the protective stop had been sitting the same 2 multiples above. Both trades in this illustration followed the same disciplined idea from opposite directions. Identify the direction value is migrating, wait for a pullback that tests the point of control, and act only when the bar closes back on the trend side of that value line. Of course, not every setup behaves this cleanly. In real markets, pullbacks can push straight through the value line and hit the stop, which is exactly why the fixed, volatility-scaled stop is there. And that brings us to the end of our look at the value migration trend writer. Today we saw how the expert advisor builds a time-at-price profile to find the point of control, how it measures the migration of that value level over recent bars, and how it buys pullbacks into rising value and sells rallies into sinking value, all with symmetric, volatility-scaled stops and targets. Remember that everything here is educational information only and not financial advice, a recommendation, or a solicitation. Trading involves real risk, and losses are a normal part of the process, so always study a strategy thoroughly and test it for yourself. If you found this analysis helpful, please like the video, subscribe for more MetaTrader 5 strategy breakdowns, and leave a comment telling me which strategy to cover next. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.